This is going to be a quick class reviewing our trading zones. When you add your trading zones to your charts, right-click on the chart, go to Add Script, and it's alphabetical, obviously. You go down to Trading Zones. You want to leave these set like this. This is an advanced feature, and what it means is we start showing these likely highs and lows when the price moves 85% of what it normally does in a given day. So if the euro dollar, which is in this case moves 100 pips a day, when the price starts off beginning the day, we'll start showing the next support resistance area 85 pips up, 85 pips down, for example. And as the day progresses, if the price goes up, we also yank up the likely support levels later in the day. So it's projected from the highest point of the day down, and if the price goes down, we yank the top ones down. The trading zones also is made up of Fibonacci retracement levels and Fibonacci profit targets that I spend about 30 or 40 minutes doing each night, mostly for my own trading, but I upload those to the site and the software automatically shows those. These are over a longer time frame, anywhere from 2 to 3 days at the minimum to 6 months to a year at the maximum. Most of them are short term that are likely to get hit or could potentially get hit the next day. Now, this is a fib area right here, fib retracement. It was a resistance area. Once broken, it becomes support. And so as long as price is above here, it's likely to go up. But once it breaks it, that's anytime a support area gets broken, it's likely to develop a new trend. So you can see it fell about 35 pips. You got a little pullback right here, and that went down about 20 pips as well. So I'm just going to go through the charts real quickly and show them in action. You can see this pretty much made up the high, Fibonacci retracement level, and anytime the fib levels are at and above the upper containment bands, which are statistically likely reversal areas, notice bounce, bounce, bounce. Most of the time, the vast majority of the time, price does not go and stay underneath the lower bands. And so when these areas, or any other support resistance areas for that matter, are at or above the containment bands, they're even more likely. So if you saw the price go up here, then the statistical strength all of a sudden fell off a cliff, about right here. You can see about 20 minutes later, price, pull back 20 pips. So pretty high probability area to trade. This is an excellent example of, price going up, and then we yank up our lower likely support levels. And notice when it comes back down later in the day and hits this area. If an area doesn't start the day off at a particular level, when it comes back down to it later in the day, if price goes up and these areas get hit, these are very high probability places to take trades. You can see it went up about 25 pips from there. Even if you did a little scalp trade and quickly made 15 pips and out in about 15 minutes, anytime a support or resistance area comes up later in the day, because price moves up, this automatically shows up. When price comes down and hits it, it's a very high probability place to buy. Now, it doesn't mean you always want to buy, but you might want to, for example, bring up a range chart like this and look at the price. And I prefer to get into a trade, especially on a range chart, when I have 3 to 5 down bars. The first green bar I'm going to buy when it goes 1 pip above the high, so it'll be 102.31 on this bar right here. My stop's only going to be a pip or two underneath there. So you can see you quickly made, in about an hour, about 10-15 pips on that trade. Fibonacci area, notice again the containment bands contain price, as they did yesterday. And when price came down to this area, this is especially once the weakness fell off a cliff, and especially since the weekly monthly trend, as you can see on the bottom, are up, you got a nice little 15 pip bounce. And not only are these places to enter trades, there are also places to exit trades. One of our trading systems is using hourly moving average. When a price comes down and kind of hits it and goes sideways, if it had gone above this bar's high right here, we'd be going long because support was found and there was obviously buying at support. But once the support area gets broken, price is likely to go to the next support area, which is right down here. And there's nothing better than Fibonacci areas and Fibonacci profit target levels, especially when they're at or really close to the lower containment bands, as you can see. So excellent profit target on that short trade right at the hourly, and once the weakness was gone, a nice little 15 pip bounce off of there. This one never got, there was no support or resistance areas got hit. You can see though that later in the day as price went down, we start showing this level here. So later tonight, before midnight, if this area gets hit, 91.80 is likely to be the max high of the day. Notice the Fibonacci profit target. It's below the 1.5 red containment bands. Price went up, and again, major resistance there. It got a few pips away from it and came down. So excellent profit targets, excellent places, especially when it's not that weak, to look for buys. Now, in this case, the weekly trend's barely up, the monthly trend's down. If you did take a trade like that, you might take a few pips if you're lucky, but it's not one that you'd really focus on. Containment bands got hit. None of the other trading zones got hit. No fib areas. Notice the high today, Fibonacci profit target level, and it's above the upper white band, which means it's very likely to be the high of the day. As you can see in this example, the price came up to the upper fib profit target, found resistance, and came down. Again, any fib areas or any resistance areas above the upper containment bands are very high probability. Again, the New Zealand dollar, also fib profit target level above the upper containment bands, end of the up move. Fibonacci profit target level hit above the upper containment bands, end of the up move. And this is a really good trade because when the market went up, it was very strong, kind of went sideways right here. The statistical strength fell off a cliff. Very high probability place to sell when you see a sideways rectangle pattern up at the high at 55, and you can see it fell back 55 pips. A lot of times when currencies are up statistically too much, you'll get a two-wave pullback. So here's the first wave, and this is a great place to get out, to 1.618 at 10. But you'd be short somewhere up here at 50 for an easy 40 pip move. New Zealand yen, also Fibonacci profit targets that I predicted and did analysis on last night, above the upper containment bands, end of the move, and same exact trade. It goes up here, kind of goes sideways, the statistical strength falls off a cliff, goes short, and you can see price, pulled back about 40 pips. And notice, again, to end today's class, when price goes up, we yank our trading zones up as well. These did not exist at the beginning of the day. When price comes down to that level, especially this one, when the daily, weekly, and monthly trend is up and it hits this price, very high probability, and you can see it went up 30 pips from there. Look for trading zones that show up later in the day, and if price does make a big enough move down to hit them, it doesn't happen that often, maybe once or twice a week in any given currency at the most. But when you see this pattern, buy at the Fibonacci or buy at the trading zone area that was not there at the beginning of the day. Let's try to find the last one that did the same thing. You can see this is the exact same thing. Trading zone was not there at the beginning of the day. Price went up, and so therefore this is 85% away from the maximum high of the day. It is a major support area then, likely to be major support, and you can see you got a nice little 10, 20, 25 pip bounce off of that one as well.